We're here getting ready, getting my coffee ready. Thank you, everyone, for joining me. Hey there, I'm Mitch Goldberg, and you're watching my post market live stream. It's your post market live stream. How about that? We talk about personal finance. We put the personal into personal finance. We're going to talk about investing. We're going to talk about saving for retirement, financial planning. We're going to talk about the market, the news you need to know, also that you can take control of your money. That's why the name of the show, by the way, is called Be the Boss of Your Money. You notice the social media icons here? Check them out. Follow me on your preferred platform. I post on each one every single day. Lots of different content. Also, plus, I always post the highlights of the live streams the next day as well. So I hope you'll check those out. In the meantime, let's roll a quick introduction. We've got a good show for you. We're talking about Home Depot, Walmart. Is the consumer as strong as he or she looks? I feel like Walmart is more like a mirage and does not reflect a strong consumer. I feel like the Walmart numbers, which were really good today, reflects more of a worried, disillusioned consumer who's getting smashed by inflation. And I feel like Home Depot is about the haves and have-nots. We're going to talk about those, so here we go. All right, we are back. Hey, we're back. Whoa, okay. Just made the audio peak on my, my audio, my mixer. That's this thing over here. You see these green buttons? You don't want these buttons going past the middle. Okay, now you know what I'm talking about. Now you are ready to be an audio engineer, and you never want to aim the mic directly in front of you because then you get the plosives. You don't want that either, and that's not fun to listen to. And then you've got the lighting going on. I've got all kinds of lighting going on, and I'm very excited to be here. So anyway, got some of these social media icons. Check me out on your favorite platform for more content in addition to these wonderful live streams that I do, which are all about financial education. We put the personal in personal finance because when it comes to money, there's nothing more personal than that. Let's take a look at how the market did today. Then I want to talk about Home Depot. Walmart is a consumer as strong as he or she looks. Markets had an up day, and it just doesn't really seem like there's anything that wants to that could interfere with the very strong uptrend we're in heading into the end of the year. We've got Thanksgiving coming up in a week and a half already. A week and 2 days. That's like crazy. It's weird. Like someone said to me, 2021 is the slowest and fastest year ever. But didn't we think that with 2020 also? Did it go by fast? Yeah, it sure did. So let's take a look at the market, and let me pop myself up there. Let me get rid of the social icons over here. Boom. All right, those are gone. All right. So the Dow up 54 points. It was up about, I thought it was up about 200 at one point, but still up is up. NASDAQ had a very good day, up a solid 0.75%. S&P up 0.39, up 18 points. Gold, whatever, off a little bit. I'm just so disappointed in gold. You think with all the inflation, gold would be like, much higher than it is now. I don't know where, maybe 2,500 or so. Okay. Just does not want to break out. Gold on an inflation adjusted basis is not even doing that great. And gold is like the ultimate inflation hedge and indicator, right? Oil, it's kind of weird to say gold on an inflation adjusted basis, but because it is like inflation, right? And the oil, okay. But I really wanted to get that phone call, but that is a shame. Oil is off a little, still above 80. The 10-year Treasury 1.64%. And I heard somebody say, "Oh, the 10-year yield is 1.6." Not really that worried about it. I'm really not. we've been in the 1.6s, 1.7s in very recent history. Um, if we run to like 1.9 2.0 really fast, that'll definitely get my attention, and that'll be negative for the market. But the VIX is low, 16. That's this over here. You see that, and barely it down a little bit. So investors are very sanguine, right? I like to use that word, sanguine. I feel like I'm in the mood for um, maybe for dinner we'll have sanguini with white clam sauce. I know, Natalie. I'm such a tool. Okay, stock indexes. Let's keep going. Russell 2000 is up 4 points, up a drop. Really, just I mean, more a slightly positive overall, happy day. Uh, I feel like people are tired. I feel like investors are tired. By the way, while you're watching this, if you have any questions, okay, hit me up in the comments. Words of wisdom. I see Josh is out there. We got to connect, bro. We got to connect, man. We will connect. So let's talk about a couple of things, right? So one of the reasons the market was up today is because of it's up because of strong earnings from retailers. And if you look at retailer stocks, the big ones are Home Depot and Walmart that reported earnings today. And they both had really good numbers. Yet Home Depot is up and Walmart was down. I want to experiment with something. Hold on. I just turned the compression almost all the way up. I wonder if that makes a difference in how I sound to you on in the live stream. But I listen to a lot of live streams, and I just feel like when people turn the compression knob way up on their mixers, they sound really good. It gives you that radio sound. So let's take a look. Walmart, okay? Walmart. Okay. Walmart, it's up 20 cents after market, but it was down 2.5% today and down below its year high. I don't think good numbers out of Walmart is necessarily reflective of a strong consumer. People are flocking to Walmart because of inflation. Walmart has massive buying power, so they're still able to squeeze the hell out of their suppliers more than anyone else. So you're getting what you feel is more product, more bang for your buck at Walmart. Their online strategy is panning out very well for them. But when Walmart has really good earnings and the stock goes down anyway, I think it's significant. I think it signifies. I think it signifies more of a weak consumer, and people are playing scared. You're not buying more and more stuff and your groceries and your gas at Walmart because you're optimistic about the future and because you're flush with cash. Although consumers supposedly are flush with cash because of all the stimulus money that's been going out. But I don't. I think people are more in search of protecting their dollars, and I think that's why Walmart was down today. I don't think it bodes particularly well for retail, like a lot of other people say. That's just my thought for now. But Home Depot, on the other hand, was up a lot. I mean, that was up 20. Wow, that was up $21 today. Okay, take a look at that. So Home Depot up 21 today. Up almost 6%. For a company as big as Home Depot, up 6% in a day is a huge amount of money. That is a very big move. I don't think I've ever seen Home Depot go up this much. And it's not like it hasn't been up. It's not like, oh, it's up 5% because the stock cratered and the stock market cratered. So a lot of these high quality blue chip stocks can pop up 5%. No, this is already up near its high, and it still managed to go up almost 6%. Interesting fun fact today. The market cap on Walmart for the very first time surpassed that of let me rephrase that. For the very first time, the market cap of Home Depot surpassed Walmart. So now Home Depot is the biggest retailer in the country, bigger than Walmart, which is never happened before. Um, Walmart does more in revenues, but Home Depot's profit margins are much higher. Walmart sells lower margin products like gasoline and supermarket stuff, groceries, supermarket stuff. So that's just a little fun fact, but it shows you that a divide here. Walmart is, I'm not saying that Walmart is like a high end store. It's not like Restoration Hardware or Pottery Barn, if you will, but I think Restoration Hardware is a better example. But Home Depot is definitely expensive. Tools are expensive. Wood is expensive. Building materials, and yet Home Depot is doing well. And it just shows you a pretty sharp divide that homeowners, people who have money, are continuing to do well, and the rest are trying to squeeze out every dollar they can at Walmart. It shows a divide. I'm not trying to get political on your ass here. Okay, I know what you're saying. You getting all political on me, Mitch? No, I'm just giving you facts. I'm just giving you the interpretation. Anyone could just tell you how each stock did today. I'm here to give you, here to give you perspective, right? Perspective. Perspective is key. That's perspective. I like how I do that. Oh, did I mention anything about the social media icons over here? Check those out. Follow me. LinkedIn is my favorite social media channel, followed by Instagram, and then YouTube and Facebook. And if you notice, this is my business Facebook page. I have a personal Facebook page. And if you're friends with me, certainly hit me up on my personal Facebook page. That I truly enjoy. I love seeing what my friends are up to and celebrating events and birthdays and anniversaries and engagements and all that. I happen to enjoy that. You notice what's absent here? Twitter. I used to be such a Twitter bug, and it's like I don't even go on Twitter anymore. Just I find I get no joy from Twitter anymore. It's not even like great for getting the news before everybody else anymore. It's just I'm just not into it. Okay. So that's the story with Home Depot and Walmart. There is a difference, and I think the two of them show a divide. So they're really good results on the different sides of the same coin, is a good way to put that. Let's talk about Walmart's strategy, and then let's talk about consumer spending. Okay, so let's talk about consumer spending first. I think one of the reasons you're seeing Walmart do well and you're seeing consumer spending hold up is because people are looking at things the wrong way. Excuse me. We have the millennials who've come of age, and I think a lot of analysts, investors are still looking at just the baby boomers, the baby boomer bulge, and everything is looked at through that prism. Yeah, they're pulling back, maybe, whatever. I think you're looking at it the wrong way, if that's what you think. The baby boomers are, 30-year-olds, 40-year-olds, 2 to 3 kids, 2 cars in the garage. One of them's a Tesla, right? And they're buying homes like crazy. And they are such a big generation and spending so much money that they're having their own force on the economy. Home Depot is being moved, in my opinion, by millennials, not baby boomers. Home Depot has made the transition, whereas Walmart, there's a lot of people shopping at Walmart, but I don't think Walmart's is generational. I just think Walmart is indicating that there's a problem in the economy. But we have to stop looking at things through the prism of the boomers. And you're watching this. You may be a boomer who's watching this. I'm a Gen Xer. I'm 54 years old, so I'm in the older segment for the Gen Xers because I was born in '67. I think the Gen X generation starts in 1965 and the boomers ended in '64. So I want you to just think of it in terms of don't think of things in the past ways that we thought of on Wall Street. You have to look at it like the millennials are here, demand for their products are here. They have jobs. They're part of the Great Resignation. When you hear the Great Resignation, so many people quitting their jobs to get new jobs. This is predominantly millennials. Uh, you're not getting baby boomers who are 65 years old quitting their job. It's kind of sad, but I think a lot of boomers, and I know a lot of boomers, a lot of my clients are boomers, they don't want to quit their job because they'd be afraid that they can't get another job because of age discrimination. They're perceived as old, slower, maybe. It's a real thing, by the way, age discrimination. It is a very uh, real thing. It's a very sad thing as well. I know so many boomers who they're not tired. They just they know more of what they want and what they need from their job. And often it's not necessarily just more money. Okay. There's a certain job satisfaction, respect, and camaraderie that they're looking for, as opposed to just climbing the corporate ladder and putting up with a lot of BS, as we all do in the beginning of our career. Man, oh man, I could tell you stories about the BS that I had to put up with in the beginning of my career. I'm sure we all could share a story or two that's like, I can't believe I let people walk all over me, or I can't believe I was such a doormat when I was 23, 24, 25 years old. But everybody goes through that. Not everybody. I mean, if you have a crappy boss like I did at that age, but then I had a good boss when I turned 25, and that was it. Everything was good. All good. Um, so that's why things are piping along in the economy. People thinking in terms of the baby boomers, the people, they're hurting right now. Maybe they're not happy about the economy. They're hurt more by inflation because they're closer to having to live off of their investments, or they are living off of their investments now. So inflation hurts them more than younger generations. But if that's what you're thinking of it the wrong way. The millennials are the ones who are really ramping up their spending, not the boomers. The boomers are ramping up spending on healthcare, but the millennials are ramping up spending on houses and cars and everything associated with them, and clothing and fashion. Okay, so enough of that. Um, Amazon and Walmart. I don't know if anyone's ever presented this to you, but Amazon was never about selling books. Now, that is so blatantly obvious today, but Amazon started as a bookseller out of Jeff Bezos's basement, and they started selling books, and it was convenient. It took a little while, but he was on a shoestring budget. His desk was a door from his house, like a bedroom door, like one of those hollow doors on two file cabinets, and that was his desk for years. And then they started to sell more and more and more, and it started to impact the fortunes of Barnes and Noble and B. Dalton bookstores and Books a Million and a few others. But Barnes and Noble is the one I want to focus on. So Barnes and Noble decided, we'll sell books too. We'll sell books online. We'll sell books on the Nook, which was their version of Amazon's Kindle. But Amazon was never about books, and that's the thing. Amazon was never just about books, and then videos. We used to get VHS tapes, and Amazon. It was never about just the product. The books were just, what could we sell to get this thing started, and how could we learn about having an online business. So competing with Amazon by selling consumer products like books and pottery and cheap consumer electronics, it's going to take more than that for Walmart to compete with Amazon. I mean, I could see why people buy order online from a Walmart, because people have told me they find it convenient if they have to return something. I find it woefully inconvenient to use Walmart, to actually go to the store to return something. I'll just put it back in the box, slap the shipping label on it, and UPS picks it up, or I drop it off at the FedEx UPS store, or they come to my office building, and that's how I return stuff. That's me, I know, but I think maybe it's a boomer thing where they like to return stuff physically, whereas the rest of us hate returning something physically. Okay, so let's move on. Walmart's getting a lot of kudos for competing with Amazon through Walmart.com. But Amazon is about uh, Ring. It's about the cloud computing. It's about so many other things. It'll be about a drugstore. It'll be about delivery. I mean, look at the stock of Rivian, that company that just went public last week, and for the EVs for pickup trucks, right? Walmart is about owning. I mean, Amazon owns aircraft. Amazon has like a massive amount of acreage at an airport in Kentucky. Amazon is about logistics. Walmart uses, I guess, Amazon. Walmart uses U.S. Postal Service or UPS or FedEx. But to compare Walmart and saying they're really catching up to Amazon is like it's a really bad comparison, because what Walmart is trying to do is what Amazon did like 15, 20 years ago. And to make any comparison for Walmart to Amazon, because Walmart has Walmart.com, makes absolutely no sense. And if you're just going to compete with Amazon just on consumer products, which is what Walmart sells, you're not going to do too well, because Amazon has funding from their other businesses like the cloud, so they could lose money on like literally everything else. Walmart can't do that. Eventually, Walmart actually has to make money on their online. Walmart doesn't have the depth and the massive cloud business that Amazon has. So I just wanted to compare those and let you know why comparing Walmart to Amazon online is just it's not really an apples to apples comparison. It's more like an apples to grenade comparison. Okay, so let's talk about a little bit about inflation. I was quoted in this article today on CNBC. Little bit of a humble brag here, but let's check it out. Okay, let me get rid of the overlay. All right, the social media overlay. It says here, for financial advisor Mitchell Goldberg, that's me. Okay, president of Melville, New York based client for strategy. Melville is on the Route 110 corridor on Long Island. If you didn't know where Melville is, I'm about, I don't know, 30 miles from Midtown Manhattan. And without traffic, I could be through the Midtown Tunnel in about 35 minutes. Okay, so that's where I am. Okay, so let's talk about this article. It's written by a friend, Michelle Fox, over at CNBC. And the title of the article, let's go to that first. As inflation rises, here's where to find opportunities to make and save money. And the things that I talked about, I hate when I say it's like you're trying to fill in space. It's okay to have a little silence. Okay, I'll just get my quotes. Financial advisor, Mitch Goldberg. That means enough. Okay, so one of the things I said, 12 to 24 months. If inflation does cause the stock market, if it causes stocks to tank, I tried to highlight it. Didn't come out that great to highlight, but if inflation causes stocks to tank, you're going to want your 12 to 24, even 36 months of financial obligations in cash out of the stock market. This way, when the stock market tanks, if you have all your money in the market and you have to sell stocks to pay for your financial obligations, you're going to wind up selling more stocks, more shares of your stocks, of your mutual funds, of your exchange traded funds. And that means you have fewer shares working to catch up when the market does recover. And that puts you into something called a negative squeeze, a negative sequence of returns. You don't want to be there. Okay. Review your assets. The stock market tends to beat inflation given its rate of return, although growth may be slow during inflation periods. Inflation makes, am I stuck here? Okay. Inflation makes future earnings worth less when discounted to today's dollars. So if you have a stock that's trading $100 stock that's expected to earn $1 next year, it's trading at 100 times earnings, but you value that earnings based on interest rates and because you think the company's going to make maybe $4 the year after. You expect a lot of earnings growth. But if interest rates go up because inflation goes up, then what that means is your dollar over 100 times earnings is maybe more like 60 or 70 times earnings, and your $100 stock could be 60 or $70 a share. Okay. So let me see. So for that reason, stocks that are expensively priced compared to the rest of the market may be subject to more downside. Maybe. Goldberg suggests considering, okay, am I frozen? Goldberg suggests considering cyclicals. I also said bank stocks. Consumer discretionary energy. Why consumer discretionary? Like you think, well, if the economy slows, interest rates go up, shouldn't you talk about consumer staples? Now, let me explain something. Consumer staples are the things that you need. We call that food, toilet paper, toothpaste, things that you need. Discretionary are the things that you don't need. You don't need the Under Armour sweatshirt. You don't need the new Nike sneakers. You don't need the new expensive watch. Those are discretionary items. And I know if you want if you want them badly enough, they do become a need, but that's a whole other psychological dopamine inducing story. Okay. But when the economy slows, people who have money typically don't get hurt, or they don't get hurt as much. So they will still maintain their spending on luxury goods and services. So the companies that sell luxury goods and services, consumer discretionary, typically become more highly valued in the eyes of investors, and those stocks would go up. Okay. It's like, why did Starbucks stock do so well during the Great Recession, 11 years ago? Discretionary. Tiffany did very well during the Great Recession because wealth stays wealthy. It's the rest of us who suffer in a bear market and inflation, right? So there's a few other people. I don't know who they are. Okay, smart money moves. I had some smart money moves in here. Okay, consider locking in prices. Let's see if you can see that. All right. Consider locking in prices. Oh, there we go. Consider locking in prices like a prepaid college plan or funeral expenses. Okay. I know that was kind of depressing, that last one. But the point is, there are things that you could prepay in today's dollars. So you could buy a future service like college in 15 years, but you could pay for it now and lock into today's dollars because college in 15 years is probably going to be a heck of a lot more expensive than it is today. So one way to combat inflation is to prepay for major upcoming expenses. The other thing that people do when they're worried about inflation is they hoard things. So it's like if you think that, let me get. If you think that inflation is going to keep rising, you're going to want to start accumulating goods because they're cheaper now. So if you think, for example, toilet paper or consumables, if you think they're going to be way more expensive in a year, you'll want to stock up now at today's lower prices. Now that in and of itself does cause even more inflation because it increases demand. And if there's not a commensurate increase in supply, prices will continue to go up. The last thing is, I think we spoke about this yesterday, but if you have a mortgage and you haven't refinanced, you really need to consider refinancing. Unless there's a reason that you cannot refinance. And like if you have a great credit and money and you lose your job, you're like a friend of mine is a mortgage banker, and he said he's, during the Great Recession, he was not, during the pandemic, at the start of the COVID pandemic. He's like, I'm working on these mortgages. People make a lot of money. They have assets. And all of a sudden they call me up and they say, I just was laid off. Can I still refinance my mortgage next week? And, he's like, no, you can't. Sorry, got to get a new job, and maybe even have to be at that new job for 2 years. So those are the things that are going up. I'm going to post this article tomorrow in my social media. So again, follow me on there, my social accounts. Okay, right here. Follow me there and you'll see the article. It's on CNBC right now. Just put me in the search bar, or Michelle Fox. That's Michelle with 2 L's. Fox, she authored the article, and you'll find it there. Anyway, that's it. Time's up. I'll speak to you guys very soon, and I appreciate you watching. Have a good day.